This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus plans to hold a meeting of its Joint Ministerial Monitoring Committee, JMMC, in early February, though an exact date has not been decided, three sources from the alliance said. OPEC Plus, which comprises the Organization of the Petroleum Exporting Countries and Allies led by Russia, usually holds such meetings every 2 months to monitor the implementation of its production agreements. The committee brings together leading countries within the alliance, including Saudi Arabia, Russia and the United Arab Emirates.
U.S. liquefied natural gas exports hit monthly and annual record highs in December, tanker tracking data showed, with analysts saying it positioned the United States to leapfrog Qatar and Australia to become the largest exporter of LNG in 2023. The U.S. was the standout in global LNG supply growth in 2023, said Alex Munton, director of global gas and LNG research at consulting firm Rapid and Energy Group, of the rise to 8.6 million metric tons leaving U.S. terminals in December. Qatar was the largest LNG exporter in 2022 and Australia the second largest that year, U.S. government data showed.
Moving on to the top news in the energy sector.
Germany's solar and wind power installations hit a record in 2023, but only photovoltaic energy reached the government's targets, industry associations said, expecting continued growth this year with further reduced bureaucracy. Germany aims to cover 80% of its electricity needs from renewables by 2030, up from 52% in 2023. More than 1 million new solar power systems generating 14 gigawatts of energy were installed in Germany last year, up 85% year-on-year, thanks to a boom in residential solar demand, putting it on track to reach Berlin's 2030 goal, the BSW Solar Power Association said on Tuesday.
Denmark's Maersk and German rival Hapag-Lloyd said on Tuesday their container ships would continue to avoid the Red Sea route that gives access to the Suez Canal following a weekend attack on one of Maersk's vessels. Both shipping giants have been rerouting some sailings via Africa's southern Cape of Good Hope as Yemen-based Houthi militants attack cargo vessels in the Red Sea. The disruption threatens to drive up delivery costs for goods, raising fears it could trigger a fresh bout of global inflation. Maersk had on Sunday paused all Red Sea sailings for 48 hours following attempts by Yemen-based Houthi militants to board the Maersk Hangzhou. U.S. military helicopters repelled the assault and killed 10 of the attackers. Next, we have the top news in metal markets. Iron ore futures rose for the second session on Wednesday, buoyed by expectations of additional fiscal stimulus in top consumer China and bets of industry growth. The most traded May iron ore on China's Dalian commodity exchange rose 2.8% to 1,017 yuan and 50 fen, $142.34 per metric ton as of 0320 GMT. On the Singapore exchange, the benchmark February iron ore was up 0.5% at $141.76 a metric ton. The 3-year forward gross capacity additions stand at 150 million tons, the OECD said in a report. This new capacity additions are expected to be dominated by India and ASEAN, reflecting a concentration in emerging markets, Citi analysts said in a report.
HSBC forecast on Tuesday that squeezed supply, improved Chinese demand and the global energy transition will keep commodity prices elevated in 2024, before falling the following year. We forecast commodity prices to rise by an average of 2% in 2024 and fall by 4% in 2025, HSBC wrote in a note. HSBC expects China's growth recovery and ongoing supply constraints will keep commodity prices supported this year. It said geopolitical risks and expectations of looser monetary policy in the second half of 2024 will add to the upside, while downside risks include the ongoing slowdown in global growth.
We will now look at the top news in the agricultural sector.
India's palm oil imports rose in December to their highest in 4 months as purchases of refined palm oil surged because of competitive prices, 5 dealers told Reuters on Wednesday. Higher purchases by the world's biggest importer of vegetable oils could help lower palm oil stocks in top producers Indonesia and Malaysia and support benchmark futures. India's December palm oil imports rose 1.9% from the previous month to 886,000 metric tons, estimates from dealers showed. Refined palm oil imports in the month surged 47% to 252,000 tons, they said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.